If you're wanting to use equity in your primary residence and wanting to take out a HELOC or a home equity loan, and you don't know which one to use, I'll tell you real quick. Starting with a HELOC, it stands for Home Equity Line of Credit. Imagine a massive credit card. This massive credit card puts your primary residence into a second position. That means if you fail to pay your HELOC off, the bank could come foreclose on your primary residence. HELOC is a revolving line of credit, so if you don't use any of it, you don't pay the interest on it. The thing about HELOC is you can get a checkbook off of it and basically present a cash offer to a seller for a rental property. The interest rates on HELOCs are fluctuating. They typically are pretty high. They go off the prime rate, so you're going to see anywhere between high 7s to 10%. Most of them have a cap rate that they don't go over. A home equity loan is a lump sum you receive at the closing table, and you immediately start payments just like a conventional, except your house is in a second position just like the HELOC. Do you have fixed payments just like a conventional mortgage or a VA loan or any of those products? But just like the HELOC, if you do not pay your monthly payment, your primary residence that you leveraged could be put into foreclosure. So the question now is, which one is a better product for rental investing? Personally, I would use a HELOC because it is a zero balance until you use it, and you have these funds just waiting there. And then you can also present a cash offer to a person selling their home, and that could be more enticing. They could drop the price and do better negotiation terms. The only downside to a HELOC is you have a 10-year interest only payment typically. So you're just paying interest in that 10 years. And then after the 10 year, you have the pay down period or the repayment period, which can be significantly higher. So if you're going to use a HELOC for an investment property, I would recommend as quickly as possible doing a refinance into a conventional loan. That way you get your money back out, you repay that HELOC, it goes down to a zero balance, and you kind of rinse and repeat. You can go back to the next property and buy another one.